All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, October 11th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So markets, for the most part, really just kind of a pause day. So I talked about this yesterday. 1, 2, 3 days up in a row, kind of going into that head and shoulder neckline, which is going to get negated now. So we don't really care about that anymore. And honestly, I didn't really care too much about it to begin with, especially when there's as many eyes on it as there is. But in any case, we'll call that pattern negated now. But overall, just an inside day here on very light volume. And you can see we're kind of floating up here towards the end of the day. It's about 15 minutes left. So pretty close right around the highs of the day there. But overall, for the most part, it was a pause day. But there's a lot going on that we need to discuss here. So firstly, PPI today, this morning, they came in like way hotter than expected. And core PPI upticked for the first time since April 2022. Why is the market not reacting to it? There's two reasons, and one of them's kind of a big deal. But the other one is, if we look at crude and we look at, gasoline prices, over the last 2 weeks, they have fallen pretty sharply, whereas in the last month, September, they were rising, right? There's UGA, and crude was rising, all of September, really. So that, and CPI tomorrow, same thing. It's not going to reflect what's happened over the last 2 weeks, so the market's discounting it a little bit. We do have CPI tomorrow, and it is expected to come in at 3.6. Probably comes in right around there. But again, the market's going to discount a hot number. Additionally, another way of looking at it is that the market's calling BS on it. And what I mean by that is, if we take a look at bonds, if we just take a look at a TLT, that's up 2% today. This is normal if we're looking at crude prices, right? Like say, okay, crude prices are the reason for the PPI and CPI. That doesn't mean the bonds should be up though, and they are. TLT up 2%. It's not a small move. Additionally, what gets my attention here is the dollar index is still green on the day. All right, it's just flat now, but again, it's flat, and it was green earlier, but it's not down big. It's not down enough to where TLT should be up 2%. Additionally, what else is up? Gold up 64 basis points. That's a big move for gold. Lastly, utilities up 1.64%. That is a big move for utilities. Why am I bringing up these four specifically? All of them being flat or up big. Because dollar green or flat, or strong dollar rather, for the last 2 years has meant weak bonds, for the most part weak utilities, and weak gold, right? So that's kind of been the setup here for the last 2 years. All four of them are green, or at least dollar holding up to flat today. What does that mean? That's kind of a traditional old school risk off look. Why do I care about that? Because that's a different, and I have not heard a single soul bring this up all day long, and it's staring everybody right in the face here. But that is a traditional risk off look. What do I mean by that? It means the market's probably pricing in an economic slowdown. Why else would I say that? Well, the yield curves are starting to normalize, right? We take a look here, and today they're coming back in because the 2-year is getting a little bit of a bid off the PPI number, but it's not, again, short end, right? So inflation short term, but it's nothing crazy here. And the long end's starting to come back in. But my point is, and this has also had a big move, so it's going to pull back here. But this continues to uninvert, and you see TLT and GLD and XLU continue to trade higher. That means there's something around the corner that the market is looking at and saying a traditional risk off, right? Stocks got murdered in 2022, and so did bonds. So the traditional risk off play did not work. Even utilities, while stocks were getting destroyed last year, they held up, but they did not do a lot, right? They were kind of sideways. So that kind of correlation is starting to, again, it's only one day, but it could be starting to break down. Well, you might say, well, why is QQQ up then? Well, the bond market's going to be way ahead of the stock market as far as this is concerned. That's just how it works. Bonds will make the move first. The dollar will make the move first, and then stocks will kind of react from there. That's just kind of traditionally how it works. There's a lot more dumb money in the stock market. It's later to react. But moving forward, we need to pay attention. How does gold react? How do utilities react to bonds? This is all contingent on, the yield continuing to come in, right? So if TLT continues bidding, you need to watch how risk assets and risk-off assets react. If it stops and it rolls back over, well, then we can forget about it. But today, we should really pay attention to that. Additionally, last thing, again, oil coming in very sharply. Couldn't hold those gains, kind of filled that gap there. And you're kind of back below that 80, well, you're above 83, but you basically test that 83 handle again and not really holding that gap. Why does this matter? Again, this kind of fits in the theory, right? TLT up, gold up, utilities up, crude should be down, right? And it is. So there may be a chain. Now, this isn't going to last forever, but, I still believe in the stagflation trade, but that doesn't mean you can't have big counter trend moves, right? Again, if we look at the bond market over the last, however many years, there is big rallies here in the 10-year, right? Big rallies, but the overall trend was down. It's kind of changed. Now we're looking for other counter trend moves to the downside, but the bigger overall trend is up. So just be aware of that. And if we do see the yields really come in and treasuries bid, could mean somebody out there is getting blown up. Watch credit spreads too. Anyways, had to talk about that. But in any case, spiders here, basically at the highs of the day up just under 0.5%. We'll look at gap fill, but I think 441 in the short term is where it's going. Doesn't mean it'll get there tomorrow. We might need to flag first and then kind of trade up into OPEX. That could happen. But max move right now should be around 444, 445 if we even get up there. Triple Qs. 441 probably coincides with this trend line here, so watch that. This will be a major trend line, and we could hit that in the next couple of days, but a lot of resistance up here in this zone, so keep an eye on that as well. If we could even take, I bet you, fib lines up too, so we can just take a fib here for the Qs. Okay, there's your 618. Oh, guess where the 618 is? Right exactly at that trend line, right, with this breakdown bar. So that's probably going to be resistance if we get up there. Keep that on your radar. Level to watch. IWM stalling out here again. Pause day. 1, 2, 3 up into the 20 MA. Told you it would probably pause, and it did. So we'll leave it at that for now. You probably need to flag if you're going to get through this, but you really got to repair this. You're below the 20, below the 50, below the 200, below the 100. Got oversold. You got to bounce here, but right now, if you're bulls, you want to look for a daily higher low. And then take that pivot out, and then maybe you can get to 180. But again, this is still a weak chart, and it's telling us the breadth is not good. It's all the Magnificent Seven right now. DIA here via the diamond hit the 200 and the 20 and pulled back. Again, this likely needs to flag a little bit if it's going to go higher. But I could see this getting up to 342, 343. But that's really all it's got right now. Again, same thing. Higher low. Bulls want to see that or a flag. You take this low out, then it's down to 325. Semiconductors here up 1% on the day. I did read something that the short interest was at a really like a historic low here. I'm not so sure about that, but I could see it 153 right now. That's where I've got it going. So it's just something to keep an eye on. But 153 should be resistance here for the SMH, and then you have the gap fill at 154.76. Not sure if it gets up there, but semis are holding up for now, and we should respect that. IGV also through that this pivot here. Right now, we'll say 358 to 360 is going to be your resistance level there on the IGV, but again, still holding up and no real problems. You held that trend line on the weekly, and that's really all it needed to do. Dow transports here. Lower and then popped back up to the green side. Again, I like that breakout there. It needed to happen. It was getting overdone. He held the 200. This probably has a zigzag left in it. So we'll say near term, if you can flag here, you're probably looking at 15.4. And then obviously I keep telling you guys 15.5, 15.6 is your next kind of level. But transport's hanging in there. And again, we'll leave it at that. We already touched on rates a little bit, but we'll cover the 2-year. Again, just holding that 5% area. Again, you don't want to see it take out these highs. There will be huge problems in the market if that happens. 5-year holding up okay. Trend is still up. The 5 looks the most stable to me, honestly, out of all of them. Then the 10-year here holding that 20 MA for now. Could get a bit off of there. Same thing with the 30, kind of close to that 20 MA. Maybe we dip down and touch it, put a toe on it tomorrow. But that should get defended. What I would look for, though, is a lower high. And if it does that, you're going down, back towards that 4.45 handle. 10-year, same thing, right down to, 4.3, 4.35, right in this area. That's your breakout. If that gets back tested, I expect it to hold. But again, yields continuing to pull back a little bit. All right, XHB, so on to housing here. Continuing higher, still a lot of resistance up here at 78, 78.50, but that's just where it's going to go in the short term. Pivot high, gap fill, head and shoulder neckline. So we'll see. That should be short-term resistance. Again, same thing. You want to see a pullback, a higher low, and then, if you get through that, then you can go up to 80, 81. But right now, XHB hanging in there, VNQ up 1.7. That's much needed bounce there. That 20 MA will be major resistance in the short term for tomorrow. So might even be a scalp trade tomorrow on the short side. We'll take a look at that in the morning for a day trade, but we'll see how it reacts there. Again, same thing. You want to see a higher low here. You need to see a higher low here. You cannot take out this pivot, especially on a weekly close, because you already took this out on a weekly close too, and you're holding that 200-month moving average for now. But again, a chart that's in it's in terrible shape, and there's really no other way around it. The best thing you have going for it is that maybe everything's priced in, and that's why it's getting hit so much. But anyways, XLF, again, pause day there. Below the 20, we'll see how it reacts here. Still have potential lower highs. You don't want to see that come back down. Again, below the 20 moving average, we'll have to see if you can get above that and repair that. Then you got to get through this trend line, and then we can go from there. But again, still a weaker chart below those moving averages. Be aware of that. KRE, same thing, back above the 20, but I still don't love this chart here. And there's still a lot of resistance up at 43 to 44. But it is green on the day, and we'll leave it at that there. KBE still has resistance at 38. KBWB on the weaker side, down 4 cents here. Again, can't rally in a green tape. I don't like these big banks. Broker dealers holding up. Again, if this flags, this can push to 500. If not, 475 will be the level on the downside. All right, crude here down 2.3%. We did close out. We actually played both sides of this. Shorted up here a few weeks ago, and then we actually bought last Friday, and we had a nice gain on it. Closed this out today. I don't like what it did, getting below that gap window. And then, just intraday, you got the bounce, and it's been kind of dead cat. I'm okay with you running stops here and taking this out, but you want to see, for me, I would have wanted to see like that V shape. Then that stops got ran, and they're just going to take it higher. So close that one out for a 4% gain. Nothing great, nothing terrible. But we'll see what this does here. Again, if bonds continue to rally, I don't like that for crude. So keep that on your radar. Again, watch all these asset classes. Watch how they react to TLT and TYX here. But crude rolling over a bit, didn't quite fill the gap. If it gets below this, it still has a lot of support down at 77, 78. But in the short term, definitely weak. And I would prefer to some type of a zigzag up to 89, 90. Doesn't mean it still can't get there. You could put in a daily high or low. There's nothing to say that doesn't happen, but the chart's just a little bit weaker here, obviously, after today. All right, so market set to close here in about 20 seconds. We'll get over to XLE. Again, this looks a little bit better. It's kind of all over the map. There was news from Exxon. Some M&A news actually made a lower low there, and it's trying to hold on there. Good volume behind that. But XLE hanging in there. I'm not doing anything with it right now. It's in no man's land. Just leave it alone. There's the closing bell. XOP down 24 cents. Again, not doing anything with that either. It's equidistant between support and resistance. There's nothing to do with it. OIH holding up 61 basis points. And that 20-week moving average held nicely. CCJ, again, could be a bear flag starting to form. Watch that. So right in this area, watch that pattern. If that does that, could be setting up a move lower. Again, you guys know all I care about is 36.91 on a weekly close. If you're below that, green bar low on Friday's close, CCJ is done for the foreseeable future. Same thing with URNM. You really should have hit this 20 MA, and then if strong, it should be juice, right? It should be juice to get off of that. But you're kind of just going sideways, so could be bearish consolidation for a zigzag down. Again, this is not unhealthy, right? So in June you were at 27 or 29, and you went from that to almost 100% rally in a few months. Since August 18th to September 29th, you went from 34 to almost 50, right? This is not unhealthy, right? I'm not hating on uranium. A zigzag down would not be the worst thing. But next area is probably around that 40 handle. So just be aware of that. This is why I say don't chase it. Nat gas, what can you say? It was at 345 this morning, went down to 322, and then all the way back to the flat line. Character has changed. It's the reason why I've said for months now, if we get above 3, it's going to squeeze. You're seeing dips bought. Previously, if we had this type of a down move in the morning, we would have closed at the lows and we would have done one of these, right? That's kind of been the character of it, but it is above that 3 handle. By the way, everybody, and I mean everybody, is calling for this to go back to 3. And everybody's like, oh, it's going to go to 3, buy it at 3. I don't think it gets there. There's nothing to say that this doesn't just flag here. Maybe even get to 315, 310. But when I see everybody calling for a certain level, that's the level you want to buy it at, it's probably not going to get there. Just keep that in mind, but it's holding up really well and dips are being aggressively bought on it. All right, dollar index. So dollar, again, it's hanging in there. It's fractionally higher here. The cash contract is fractionally lower, but this is the continuous here. So you see a green candle. I'm in the camp this can get a bounce tomorrow. I know we kind of violated that trend line, but we never really closed below yesterday's low here. I think this can get a bid here. The key is, does it put in a lower high? And again, it's the same thing with the 30-year. Do we bounce at the 20 MA, put in a lower high, and then head lower? I think that's possible. But dollar is holding up. It's trying to hold the flat line for now. And again, if you do start to head lower, like I said, 104.50 will be a level to watch. Again, if this starts to trade up with bonds, there's a real problem out there. But right now, just flat to negative, flat to positive. I will leave it at that, but I do think it can get a bounce tomorrow. All right, gold here, already touched on a little bit. Where's that going to go? 1900. You guys already know that. No reason to me recover it. Again, you guys know silver's going to 2250. That's going to be resistance in the short term. Platinum holding up. I'm watching that for pattern. And then palladium here trying to hold up. I still would like to get that a little bit cheaper. And then copper, that should roll over to 340. Might not do it right away. By the way, keep this on your radar too. Again, right? So PPI, right? If the market is worried about inflation, why is copper down? Why is crude down? Why are bonds up? Okay, keep that in mind. Think about these things. Doesn't mean long term, I'm in the stagflation camp long term, but short term, macro versus micro, it's an important distinction. It'll make you a lot of money. Bitcoin here pulling back. Guess what? So below that green bar, now this candle closes in 4 hours. We'll see if they save it. I'm not going to sit here for the next 4 hours and do this video, but if you close below 26,984.19, then this has failed. And by the way, this head and shoulder, inverse head and shoulder has failed too. That would make me defer to the weekly, which is a bearish inside bar. So be careful. You do have the monthly, which is still bullish. That's the positive you have there. And that's the most dominant time frame. So you got to respect that. But failed pattern on the daily tells me we probably want to go lower here. You can't take this low out. So Bitcoin in a little bit of trouble. And I'm not doing anything with it. The market's way too illiquid. But that's the TA on it. Anyways, spiders here. Let's see where we closed. Yeah, so right at the highs of the day. So up 42 bips. Nothing terrible, nothing great. Little pause day. Again, if the dollar does bounce tomorrow, we might need to pull back. We might need to flag a little bit here. But I do think minimum, I've already done calculations on it. I do think minimum we get to 440, 441. 444.50 to 445 would be max move here in the short term. Again, short term doesn't mean it can't go higher eventually, but right now I'm just looking for this area here around the 50 MA, and that should line up with this trend line. on the QQQ. I think you get that to line up. And if you get, I don't know, say the 20 MA on the 30-year to line up and get a bounce, and I don't know, the dollar to get a bid here, and gold to hit 1900 and pull back, right? See how these charts all line up, right? So I think you probably get a pullback there. So we'll look at that. But watch that level there on the Qs. And again, watch 440, 441 on the spiders. That should be a big level here in the short term. So anyways, guys, can wrap up here. You guys take care. Come find me on CarnivoreTrades.com. Talk to you guys all tomorrow.